Hi, good afternoon. You're watching Closing Trades right here on ET Now, and what a fantabulous trading session this is turning out to be. The fact that we managed to top the 17,800 mark for the first time since Feb 21st. So that said, we're sitting at the highest point in the day. In fact, on the futures, we're nicely scaling up to 17,859 as well in trade, and that's an uptick of nearly 0.5% in trade as we speak right now. The flavor today is largely pharmaceuticals. In fact, you're seeing gains on Divi's. That stock is holding up almost 9% in trade. IT, of course, is in focus ahead of TCS's numbers later today. And then, of course, the entire fertilizer pack, FACT, RCF, Deepak Fertilizers, they're all holding up almost 5 to 20% as we speak. The broader end of the market as well is participating today, and that's pretty much keeping in tandem with the benchmarks. You've got a positive breath at your hand. Besides Divi's, there's also Laurus Labs, there's Biocon, there's IGL, Metropolis. These are all stocks which are buzzing quite smartly in trade. European markets as well, they're scaling higher. In fact, the CAC has managed to clock its all-time high amidst all the recessionary concerns within the European region. CAC is scaling up very nicely as well. And of course, later tonight, all eyes are on the inflation data in the US, and more importantly, the Fed minutes as well, which are going to be detailed. So that are some key data points that the markets are going to be tracking from here. But Anisha, so far so good.
So far so good. 17,800 after a long time is what we have seen, and very surprising moves coming in from pharma, though it's the FMCG pack which is on the back foot today. So Nestle, HUL, etc. are not doing too well. And IT is a bit, it's making up its mind. It started off a bit tepid, but now it's building on to gains over 1% when it comes to Infosys and TCS. We'll get to know how the flavor of this quarterly earnings is going to pan out when the Bellwether announce its earnings later at 5 p.m. And at 5:30 p.m., you'll watch the top management of TCS right here on ET Now. Rajesh Gopinathan, the CEO designate, Kriti is expected to join. You'll also have NGS, Milind, etc. from the entire, TCS top management, which will be there on ET Now at 5:30 p.m. today. So we'll watch out for that big earnings, which is lined up later today. But let's try and get a sense from our technical experts where else the market is headed and what's top of the mind. Kunal, you go first. As far as the index is concerned, 17,800 is here, likely to trend higher.
Yeah, I think 7 or 8 days consecutive, the markets have shown good resilience, good pickup. We moved on quite well. We've managed to cross resistances, day after day on a regular basis rather. And I think most importantly today, the sector participation is also very, very healthy, because now we are not extremely dependent on the large cap names. For example, today L&T is I think negative or slight negative for itself, but on the other hand, we're seeing the other sectors like pharma, etc. are doing exceptionally well. Smaller sectors or relatively small sectors comparatively have like fertilizers, these stocks are also doing quite well for themselves. So I would believe that that's a sign of the market breadth opening up, and even if the indices consolidate or go through a very marginal kind of an upward trend like what we've seen say yesterday and today, I think that still would be termed as quite healthy for the markets.
Okay, let's welcome on board then Naresh as well and talk about what he's making of the trading day so far. Naresh, pharma, does it come as a surprise, the fact that this is actually the leader sector today?
So not really a surprise. The index had been falling for quite some time, and over the last few sessions, we saw the larger ones break out. So we saw Dr. Reddy's take a lead, and it's gone up from 4,600 breakout to 4,850 levels today. The rest of the names are oversold even now after the bounce back. So if you look at Laurus Labs, it's gone down from 700 all the way down to 300 levels. You have a Lupin, which has gone from 2,000 plus in 2015 all the way down to 600 in 2023. So a lot of stocks have been oversold for quite some time. Now it needs to be seen whether it is just a bounce back or there is a sustainable move here. So for now, it's a bounce back to be played, and that is where one would look at a Lupin, which is a short-term breakout, a Laurus Labs, which is breaking out, Divi's, which has done so. But the leadership continues to be with Dr. Reddy's. The next one is a Sun Pharma. But a bounce back across the pharma's pack, it could even be small caps, which could something like a Alembic, etc. could bounce back over the next few sessions.
That bounce back really continues in the next few sessions as well or not. We also have Siddharth Khemka joining us on the show. Siddharth, let's begin with the IT pack itself. The expectations were a bit muted given the fact that it's going to be a seasonally weak quarter, but there's the growth slowdown as well, which is going to happen in FY24. Do you think that's priced in completely?
Yeah, Anisha, very good afternoon. If you look at the IT pack, I think the growth has definitely come down. But on the other side, we are seeing that the cross currency is supportive, so that is something like a tailwind, and the cost pressures are easing off. Attrition have come down, employee costs have come down. So I think on overall, if you look at, I think it would be a decent quarter. The outlook is something that I think is very crucial, especially given that BFSI constitutes a larger portion for the Indian IT services, and the current, the recent developments with some of these European and US banks would have some cautious concerns about the spending intensity with the BFSI sector as a whole. So I think definitely that will be the key thing to watch out for. While TCS does not give a direct guidance, Infosys would do that tomorrow, and that will be something that the entire street would be watching out for. But definitely, this tone would be set today with TCS announcing the numbers and having the interaction post that, where we'll get to understand the current environment much better.
That's a take coming in as far as the IT pack is concerned. Let's take a look at some of the other buzzes as well. And as we were pointing out, as the fertilizer space, perhaps the fact that there's going to be normal monsoon is something which is still getting factored in. Yesterday also we saw a spike, but today it's fact, which is up 20%. You have Deepak Fertilizers up 5% and RCF2 is doing well. Nuresh, would you be a buyer in any of these names? Any charts that look interesting?
So the only place which would still warrant a continuous move is, say, maybe a Deepak Fertilizers, which has corrected a lot. But a lot of these names like RCF, NFL, FACT, etc., have very low floats. Majority of it is owned by the government. So in this case, it becomes difficult. We've seen them correct also really sharp after the move last time. So I would be a little wary, maybe a Deepak Fertilizers on dips. The rest of the names do not have a similar pattern. So Chambal is more closer to 52-week lows, and NFL is closer to 52-week highs. Coromandel, the largest one, has done nothing. So I'll be a little wary here. Maybe only Deepak Fertilizers because it's corrected quite a bit and has an upside towards 700, 750 possibly. But the rest of the names I'll be careful.
When the tail wags the dog, time to get exit. Fertilizer, sugar, these are the backbenchers, right? Backbenchers, when they start gaining momentum, it means it's time to take some profits off the table. Are these the backbenchers which are at play again?
Yeah, these are backbenchers, but then just one day of up move may not be a right benchmark for us to say that whether the tail is already at the fag end of a rally for itself. But I think what you're seeing right now is a blend of large caps and mid caps. So what you're also seeing, Kunj, is that today not too many large cap stocks are participating. For example, Reliance is, I think, subdued after an initial uptick. The stock has gone a bit more sideways, flattened out the gains. L&T is negative. HDFC Bank are again a bit more, they're on the positive side, but again not too much of a breakout seen for themselves. So there are large cap names which are also taking a bit of a rest in this action, with the mid caps in the broader market are participating quite well. So maybe it's a phase of the markets which we would probably expect that indicates that maybe the indices could remain into a 50 point, 100 point kind of a uptick, say, over the next couple of days. So we may not expect too much of a high flying gains for the larger cap names, but the action is more stock specific. So in this kind of a market, it is always better that we bet on those slight high beta names, because the alpha generated over here, even for a trader, so a 3% to 5% kind of an average return on a, say, on a 1 to 2 day basis could be a good return in this kind of a market, where you may probably not expect the same happening in the large cap stocks.
But pharma won't be that back for you, would it?
Well, I think selectively, I think Divi Slab could be a very good breakout at current levels. So, it's come after a lot of time for Divi Slab. So, I don't think that this will just be a one-day up move for the stock.
Maruti is down, Tata Motors is up. Market share of Maruti has gone down from 55 to 45. Tata Motors has gone up from 5 to 15. Siddharth Kimka, is that the reason why Tata Motors is outperforming? The market share in the domestic car market is increasing. JLR has stabilized, and now markets are much more confident about it.
Yeah, Nikunj, I think Tata Motors, there are three specific business segments. One is the domestic passenger vehicles, which has been doing well for last couple of years, both on the SUV side as well as on the EV vehicle side. The other business is the CVs on the domestic side, and the biggest of all was the JLR business. So if you look at what is happening is that with the industrial capex cycle improving, the CV cycle is also kind of looking up on the domestic side. And now the latest updates that is coming in from the JLR is also pointing to a strong recovery in the volumes for JLR. That apart, the company has also started showing strong improvement in free cash flow generation for the JLR business. Q3, they did about 500 million pounds. They had earlier indicated that Q4 would be about less than that. But now they have come and said that the Q4 free cash flow generation would be about 800 million. And with that, for the full year, they are going to be a free cash flow positive about 800. So that is largely been contributed by the last 2 quarters of free cash flow. I think these are points which are making the market very positive on Tata Motors. All the three engines are firing and supporting with the stock price having not participated in the recent past. The valuations also look comfortable. But definitely the domestic business is something that is driving from earlier, say about only just 20% of the SO2P value. Now we are expecting almost 50% of the value is coming from the domestic business for Tata Motors. So that is definitely working in favor of Tata Motors.
Tata Motors 463 rupees. Nuresh, what is the trade in TCS ahead of the numbers? Is there a trade at all? And if yes, what is the trade?
So, given the volatility which happens around the results, it's a risky trade. The trade is on the long side if one has to take it. Otherwise, generally, I tend to avoid around the results. But the trade is on the long side. The stock has corrected from 35.50 back to that 31.50 to 32.50 mark, which is where the stock has been for the last almost 1 year. Say, even in 2021 January, the stock was at these prices. So the 2-year return is also zero. So the stock has not been an outperformer in the cycle, the whole cycle also, if we compare to rest of the names in the IT pack. So there is a lot of, an expectation is very low. Any good result could actually lead to an upside. So the trade if one has to take is on the long side.
You're intrigued by why there is such a price action in Divi's. Let me take it across to Somit and find out why is it that you're seeing almost a near 10% move on Divi's Labs.
Well, if you see the industry pharma industry export data has been released, and what we're understanding from analysts is that for the month of March 2023, we see Divi's export shipment numbers is close to around 92 million US dollars. Now, do remember this is a calculated data and not the exact data, but what analysts are estimating is that this number could be around 92 million US dollars. Now, this number is nearly 50% higher than the last 11-month average, which stood at around 55 to 60 million US dollars. Now, analysts were expecting the March numbers to be good, but still the number that has been implied is much ahead than what the street was expecting at 92 million US dollars, and this is one of the major reasons why we are seeing such kind of an up move in the share prices of Divi's. Now, do remember this March phenomena is nothing new, because even in last year we had seen that in March 2022 the sales numbers stood at close to 81 million US dollars as against the previous 11-month average of close to 50 million US dollars. So every year the March number is good for Divi's, but this time the number of 92 million is also ahead of what the street was expecting, and hence we are seeing such kind of an up move in the share prices of Divi's Lab.
Okay, Somit, thank you so much for putting that into perspective. So the exports data momentum has picked up substantially. Remember last month when that data had come out, it was very disappointing and the stock had seen a nosedive as well. This time it's a complete turn of events. But on that note, we'll slip into a very short break. Don't go anywhere, lots lined up when we come back.
Exports and Siddharth Khemka, let's understand the market breadth. The market breadth, I think, is opening up very, very nicely. Nuresh, what are the technicals of the small and the mid-cap space indicating? Just the index. I mean, because now you can also, now there is an FNO index also for the mid-cap index. So this index now becomes very important.
So we've seen a good recovery in the mid-cap index as well as the small-cap index. But even after this recovery, there is still a lot of catch up to be done. So if you look at the Nifty Small 100, say the equivalent high of 17,800 is at 9,500, and we are still at around 9,300. So we are still away from that point because we saw larger correction in the mid cap and the small cap space in March. And the March ending ticks in the last 3 days of March, we actually saw a cut of 3-4% in 3 sessions. So there is still a lot of catch up to be done. We are still seeing a slow and steady move. And this could continue to expand with the Nifty also making a drift up. So overall, we are still away from even catching up with the Nifty. But same is the case with Nifty Midcap 100 or the Nifty Smallcap or the mid and small cap indices. They are still 2-3% away from an equivalent of 17,800. So I see there is still a lot to catch up. The momentum is positive. We are slowly opening up. But the general tendency is we see the Nifty first take the lead and then the mid caps and the small caps start catching up. So that is what we are playing out for now.
Okay, so that's about the mid-cap space. Let's also pull up the counter of Biocon. That's reacting to a positive brokerage note coming in from BofA, wherein they're calling the risk-reward favorable. They have cut the target price to 330 as of now, but still it's a good 100 rupees upside from the current levels. They are saying that the street is factoring in all the negative plus the growth which is expected on account of the margin improvement and new products coming online is not getting factored into the stock price. So they are quite positive and they call the risk-reward favorable as far as Biocon is concerned. And we're also watching out for a couple of other counters. We have Venus Pipes in focus because Ace investor Ashish Kacholia has bought around 2% stake into that counter at around 750 rupees per share. Remember, the growth rate for the company has been quite strong at almost 40%. So the street is definitely banking big bets as far as Venus Pipes is concerned as well. But talking about the entire pharma space, Siddharth, wanted your take if you have a top bet within the sector.
Yeah, Anisha. So I think pharma is something what technical and experts are also suggesting that the sector is kind of bottoming out. Even if you look at from a results perspective, after 3 quarters of decline, finally we are expecting this quarter the overall coverage stocks under pharma, under the healthcare space, to report a 9% growth in earnings. Although that by itself looks modest, but just you have to keep in mind that last 3 quarters there has been a decline in net profit. So definitely things are gradually improving. Apart from that, the number of cases that are going up definitely is a cause of concern. But I think that is also leading to some interest in the pharma space. The domestic sales data that came in for the month of March was encouraging. Now the data for exports have also come in for some companies and that looks encouraging. So overall, I think the space definitely offers a better risk reward, although the near term outlook is not very strong. So there could be 1 or 2 more quarters of pain. Definitely short term traders and investors may look away. But from a long term perspective, as I said, risk reward looks favorable. Some of our preferred picks within the space in the large caps is Sun Pharma, which is our preferred pick there. Divi is another that we like from the space within the pharma space. But as I said, Sun Pharma is something I think we would like as a preferred pick within the pharma space.
I want to revisit Adani Group of stocks. Why? Because it's been what? 30 minutes into show. We would start the show with Adani Group of names, then the show with Adani Group of stocks. We'll only discuss that in the entire show, but 30 minutes into the show, we will not discuss them because nobody in the markets is focusing on them. Let's look at the 1 month change here. Adani Enterprises, Adani Ports, Adani Power, even Adani Wilmar. Last 1 month change, hello, 1% change. Adani Port, 4% change. Not going here, not going there. And then you look at Adani Wilmar and Adani Power. Kunal? We're not talking about it.
Again, nothing much to say.
That's why I'm asking you, sab bhul gaye.
Out of syllabus question.
Yeah.
No, because the market tends to favor more stocks which are trending and stocks which are they're lying their own ranges of consolidation. The market tends to ignore these kind of stocks. The trading activity drops down significantly. So I think it's the nature of the markets that where the buck is moving, that's where the money tends to flow in. So today, for example, the pharma stocks are looking quite attractive. So that's why the money or the institutional action could probably be shifting towards the pharma pack today. It may be some other stocks, some other sectors. So we ideally wait out for a breakout. signals for these kind of stocks. So nothing's changed for the Adani group of names, at least in the last 1 or 2 months post this consolidation. So neither Adani Power, Ports, Adani Enterprise, these stocks have nowhere given any kind of a breakout or breakdown signal. So best to ignore them.
So
What about the more resilient ones, like an Ambuja, for instance, which was the first to bounce up?
But then, even though the bounce was very shallow, Aisha, for Ambuja Cements. In fact, even if when we did a relative strength analysis for the Adani group of stocks from their Jan end lows, after the first 7-8 days of major correction, Ambuja Cements and ACC were the two stocks which actually rallied very low. So I think the magnitude of rally was 10% or 13% for Ambuja Cements, as compared to an average rally of 40% to 50%, whether it's in Adani Ports, 100% whether it's in Adani Enterprise and such other names. So the bounce was very shallow, and which is why the recovery for and the follow through price action for these stocks would remain very range bound. You don't at least I don't expect Ambuja Cements to go into a breakout anytime soon. Possibly we are looking at a phase where for the next 3 months, 6 months, in case if there is no major data point which comes across, these stocks may remain into a range. So it's best to trade only for short bursts of momentum, as how it happens, rather than any kind of a positional move for these kind of stocks.
Okay, so that's about the Adani group of companies, and specifically as far as the stocks of Ambuja ACC is concerned as well. Let's look at some of the counters which are reacting on high price volume action as well. FACT of fact is the stock which is up around 20%. It's the biggest single session gain that we have seen on the counter in the last 3 months. It's been forming the higher high and higher low pattern for the last 8 consecutive sessions, and is trading above the 50 and 100-day moving average. Fact is the stock that I'm talking about. Let's pull up that as well. Spark is the other one, which is seen a breakout from the horizontal resistance zone, surpassed the 50-day moving average, so a bit of a bullish trend working out there as well. And Balaji Amines, which has been advancing for 7 consecutive sessions, surpassed the 100-day moving average, and the volume also are on the higher side, 3 times the usual average that we have seen of late as well. The other space which is doing quite well of late has been the textile companies. So Alok Industries is one stock which is up today. You also have other names from the entire pack which have been doing quite well. And then I think we also spoke with Milind, who was talking about the Trent and Avenue Supermart counters as well. In fact, if we have that bite coming in from what Milind Karmarkar was talking about as far as consumption is concerned, what Trent is likely to do, and Avenue Supermart, because he's been a long-term bull as far as Trent is concerned. Let's listen into his rationale.
I have not been able to identify something which will go 40-50 times. But I think anything to do with consumption, and the reason I'll tell you, I do believe that overall the per capita income can move from $2,500 to roughly about $5,000-6,000, and if that happens, the boom in consumption can be phenomenal. So I would still continue to identify companies in consumption which can do very well going forward. So I'm not saying that like last time market may go up 6-7 times. We have already we have doubled ourselves. So maybe a double again from here, possibility. But within that, which will go up 5-6 times as of now, I think if one wants to take a bet, it would be in consumption.
most of the consumption stocks are trading at P multiples which are north of 50.
Absolutely.
That's the benchmark.
Absolutely.
History, since we are examining history here,
Yeah.
historically when P multiples have gone to north of 50, the future returns are always compromised.
Right.
So why do you think history this time will not play for consumer stocks?
Okay. I'll give you an example in apparel. I think overall apparel market in India is about 7 lakh crores. And there is a 8 to 9% growth in the apparel market year on year. So that means about a 60,000 crore rupees growth is there in the market. If you add the sales of all the organized retail, it still doesn't add up to 60,000. So that is the opportunity. So if the opportunity is large, these companies can grow at 35-40% year on year for next 10-15 years also. And that is the reason why the P multiples may not contract, but at the same time, those 50-60 times seems to be difficult.
So for the organized apparel market, and there are a handful of players here,
Yeah.
do you see them growing individually at 20% for next 3 to 5 years?
Yes, definitely, definitely.
Which means if you are looking at buying some of these listed apparel stocks now, and we'll talk about the themes apart from apparel, if you're buying them even at these P multiples of 50 plus, if the earnings growth is 15 to 20%, they can still give you a stock market return of 15 to 20% in 3 to 5 years.
Definitely. Because the P's will continue to be high.
But if you're looking at a market which could be as vibrant as what we've seen between 2003 and 2008,
yes,
then isn't it time to identify real big multi-baggers? Because 20%, 30%, some would say, may not be the best return in this
fair
kind
enough.
of
I mean,
scenario.
that's the whole game, right? To identify multi-baggers and to hold on to it during this boom. So we are still trying to do it, and I keep my fingers crossed saying that I should be able to identify at least one or two, because that's more than sufficient. So we're still trying, but it would be in consumption game. That is definite. The space will be consumption.
Continue to be bullish on consumption. That's the clear word coming in from Milind Karmarkar, and says that some of these companies, especially within the apparel segment, don't look at the P's. They'll always remain expensive. Trent is the one that he was talking about specifically, right now holding out at 359 thereabouts. But time to get in some closing ideas as well. Kunal, what's on your list?
Well, I'll go with the stock which I've been recommending over the last couple of days. That's Bajaj Auto. Would recommend a hold on the stock. Now trading at, I think, closer to 4,300 levels. So would suggest a hold on the stock. My targets on the upside is closer to 4,400.
What about you, Naresh? What's the closing trade that you are spotting at this point of time?
So that's a buy on GAIL India. The stock is on verge of a breakout into an all-time high. Say on a dividend-adjusted basis, the stock is just 2 rupees away from an all-time high. The recent high for the stock was around 112, but today, very recently, a couple of weeks back, it was ex-dividend of 4 rupees. So it's actually a 52-week high also. So overall, the stock is setting up for a move which could be momentum-driven going forward. So above 110, we could see a quick move to 120, 25 out here. And the whole gas segment looks interesting. So GAIL is the pick to go for.
Stock that is on Naresh's radar at this point of time. Let's do one thing. Let's slip into a very short break. When we come back, we'll track the last 30 minutes of trading session. As the stocks have been spiking in trade, let's try and understand what exactly is behind that particular move. The government may announce new rates for the NPK fertilizers this month. ET now has learned from sources that the Fertilizer Ministry is working on this new proposal as well, and the rates are likely to be announced very, very soon. My colleague Prakash is joining us with the latest details on that. Hi Prakash, tell us what you're picking up. What kind of differential are we expecting on the prices after the revision?
Yeah, sources are informing that the government may announce new rates for NPK category fertilizer products by early next month, and it may also be called as the nutrient-based subsidy rates, which is announced by the government based on current prices. New rates will be announced for Kharif season 2023, effective from 1st April 2023 to September 2023. Fertilizer Ministry is working on the proposal at the moment, as sources have informed, and examining domestic NPK category fertilizer products prices based on global market. Sources are also saying that the proposal will be sent to the cabinet for its approval very soon, and this time subsidy burden on government is expected to ease as prices of raw material have come down significantly in the global market. However, Fertilizer Ministry is expecting that the demand of NPK fertilizer products to increase in upcoming Kharif season. One important factor which also needs to be taken into consideration is with regard to subsidy bill of the fertilizer company. Sources are informing that the Fertilizer Ministry has cleared entire subsidy dues of the fertilizer companies so far. So there is no such pending dues with the Fertilizer Ministry. And also, as you are aware, the cabinet had approved rupees approximately 61,000 crore for last Kharif season, and the new rates are expected to be announced by the cabinet early next month. Back to you.
So, Prakash, if international formula is being used as a benchmark, internationally prices have gone higher in last 1 year, which means the fertilizer burden is going to come down automatically.
Yes, sources in the Fertilizer Ministry are informing that the overall subsidy burden on the government is going to be reduced this time because the raw material prices have significantly come down in the global market, and based on that, the prices of NPK category fertilizers in the domestic market will be announced. However, government has also made it clear that no additional burden will be passed on to the farmers as well as on companies. because informally the MRP of NPK category fertilizer have also been capped by the government. So government is also not in a position to pass on additional subsidy burden onto the companies. So it's a clear signal that the subsidy burden of the government is going to be reduced this time. And it will be beneficial for the farmers as well, as they will have to pay lesser amount on retail, as far as the retail prices are concerned, which is related with the NPK category fertilizers.
Okay. Right, Prakash. Thanks a lot for that. Dipin Mehta is also ready. Let's connect with him. Dipin Mehta, it's been a good, solid, and a pleasing comeback. Bulls are back, but are they here to stay?
$1 billion question.
That's why I'm asking you, because I don't know the answer.
So nobody in this show also knows the answer. All we can say is that this is a much needed relief rally, and had the market cracked below the lows which we saw earlier in the month, then a lot of technical charts and the impact of the sentiment and overall mutual fund FI flows would have got impacted. So I think this rally which we are seeing is just come at the exact precise right time when we didn't want the situation to worsen, so we can take respite from that. And whether we have a durable bottom will come to know only a few weeks down the line, when the entire pattern changes from lower tops, lower bottoms to higher tops, higher bottoms. And we have very important earnings season in play. My sense, if you ask me, is that the first half of the earnings season will be decent. So hopefully, I think this rally may have some more fuel to go ahead even further, provided I think the earnings flow, news flow is positive, which I expect it to be. So let's keep our fingers crossed. I think we've avoided a lot of bloodshed, I think, if you ask me, by recovering the way we have over the past 5-6 trading sessions.
Pull up the intraday chart of Max Healthcare and see what's happening on that counter, because it suddenly spiked, 8 to 9% in the last few minutes itself. So yeah, sudden spike coming in there. And even Aurobindo Pharma is seeing a massive surge as we speak. Even the volumes building up as far as these counters is concerned. And Piramal Pharma, etc. also coming to the party. So a lot of these pharma names clearly is the flavor of the day.
McDonald's is also up, and pharma stocks also up.
What about fertilizers?
McDonald's is Dawa?
No. McDowell's, USL.
McDowell's. Oh, I heard McDonald's.
That's where your interest lies, clearly. Dawa, daru and food. Right. Where is your interest, Dipan, at this point of time? Any takers for any of these sectors?
Okay, I think what we are seeing is selective buying taking place. These are typically, I would expect, institutional orders taking and being executed in stocks which are perceived to be at attractive valuation compared to the peer group. The common thread between the three companies you spoke about, like Max Healthcare, is trading at a lower multiple compared to Apollo and Narayan Rudalai. Piramal as well as Aurobindo are on the lower, P multiple as compared to some Dr. Reddy Cipla. And maybe in these companies, you are seeing some kind of a price to earnings multiple re-rating on the higher side. And certainly, I think such rallies are justified. These stocks, the three of them have been large time, big time underperformers, and that's what playing catch up with their peer group. And if you look at medium to long term prospects for healthcare or pharmaceuticals for that matter, they're pretty decent. I think these are the sustainable expenses which households do take place. And in that sense, there's a degree of safety in such stocks. And Aurobindo especially is really attractively valued, largely because it has been a huge underperformer in terms of financial performance the past several quarters or so. But at some point of time, call it base effect, call it new launches, also the rupee depreciation, all of this may come into play, and you may have a surprise earnings on the positive side.
Kunal, we've not realized, but it's almost like 100 rupee move in Aurobindo Pharma from the recent low, maybe more. But it's definitely 100 rupees plus. Nobody's spoken about it, but it's not today's price action, but the curve for Aurobindo Pharma has been a very sharp curve.
Yeah, third straight month of price appreciation.
What was the low?
Month. 470. I'll probably check the exact low.
Almost 100 rupees.
Yeah, almost 400.
Yeah.
397.
Yeah, can you imagine?
Was the low for Aurobindo Pharma.
You didn't identify it earlier for us?
I think identified Zydus Life and Glenmark. So
Yeah, but this one also, look at the move.
you can't have.
You can't have it
Everything,
all,
right?
right?
Exactly.
Can't have it all.
Nuresh, you also didn't identify Nifty Pharma for obvious. It's like a
So-
30% respectable move, bhai.
The point is, it's also gone down from 1,050 all the way down to 400. So it was a 60% down tick also. So it takes a lot of time to get belief back when you've fallen 50-60%. So even now, we've started only discussing after 30%. So that tells you the belief has been taken out in the whole pharma pack.
Dipin Mehta, you don't track Nifty Pharma, but I'm sure you are looking at pharma again because it's been an underperforming sector.
We couldn't actually. We used to track Aurobindo Pharma very closely, and we had investments also in the company. But I threw in the towel and I gave up on the stock about 6 months to a year ago or so. It was full of potential, very attractively valued. They even went and did a major divestment and corrected the balance sheet. But end of the day, I think the industry headwinds are very strong, especially for a company like Aurobindo Pharma, which derives a large portion of its revenues and profits from the US generics market, where there is intense competition and price erosion. So coming specifically to the question on pharmaceuticals, I think that's a selective play over there. And we've largely been underweight in pharma. But because it's such an important sector, I think if you go with the market leader, Sun Pharma, we really are enthused by their strategy and focus on specialty products. That I think is a winning formula going ahead. And maybe Sun Pharma could again become an outperformer as it has been in the past few years or so. So that's where we are quite positive on. And there's another company, small company with usual disclosure we and our clients are invested, is Suven Pharma, which is into contract manufacturing. And that also is at an interesting junction at this point of time with very interesting molecules which their clients may make commercial, and that could be a big upside for the stock as well. But pharmaceuticals, by and large, you need to be focused on companies which are now more in the domestic market than looking at exports.
From the pharmaceutical space, metals has also had a decent rally this week so far. We have seen an up move of 3 to 4% on the index, and JSW Steel has actually moved 5% higher. A lot of things working out well for the entire sector, with the steel prices in the domestic market increasing. You have the coal prices which have dipped substantially, and the iron ore prices too, and the other supply chain issues also getting sorted out. In fact, we spoke with the management of JSW Steel today. Mr. Jayant Acharya, the Deputy MD, joined us to talk to us about how the sector dynamics are panning out. Let's listen into what he told us.
Yeah, so post the Chinese opening up, post the COVID restrictions, there is an expectation that the Chinese demand will improve, and that has supported steel prices and commodity prices globally. We expect the Indian demand, the domestic demand, to be quite healthy as we go into the next year, primarily on the back of a healthy capex spend by the government of India, and also an increasing trend in the capex spend by the private sector. We see a good demand, a healthy momentum going into FY24. Yeah, so just on the domestic side, the domestic growth, we saw a growth of about 12% in India in the last year, as we finished in March 23. We do expect, as per various estimates, a growth of close to 8% in FY24. As far as export volumes are concerned, post removal of export duty in November 22, we have seen a steady increase of exports from the country. And after 5 months of being a net importer, India has turned a net exporter in the month of March. Quarter 3 to quarter 4, our exports have gone up from 1.3 million to 2.3 million as a country, as India full exports.
Okay, let's shift gears now and let's talk about Apple coming to India, and that's really the talk of the town, right? Whether it be Mumbai or New Delhi. In fact, they're, as we understand, launching a massive store in Select City Walk in New Delhi as well. And my colleague Sumita actually caught up with the ED and CEO of Select City Walk Mall about the sales that we can expect from Apple's third-party store.
So I mean, everybody is very excited in this retail scenario to have brand's own store launching on 20th of this month. So it is expected to be a multifold increase in footfalls, especially in the initial days when the store launches. Even if any phone is launched by Apple, we see queues outside the store. So opening the brand store will definitely attract a lot of people, and this will be evident on 20th.
Right. So you already have a third-party seller store of Apple here, which is not as big in size. But if you could just compare these two in terms of sales expectations, what's the size of that store versus this one? And what are the kind of sales that you used to get from that store? And what are the expectations from this particular store in terms of sales?
Sorry, again, there is a caveat to it. It's all guesstimate. I can't put a number at the moment, but that store was like 700, 800 square feet of usable space, and this is much larger space, as you can see from the facade itself. And the sales, that small store used to do 3-4 crores over on an average every month. So multifold increase is expected, and I'm sure this will do very well in times to come.
Apple is coming to India. I can say out of experience, every time you've gone outside India, you've seen these mega Apple stores. They are
iconic stores.
They follow this simple policy, which is that you make a statement of grandeur when you go to an Apple store. You can sit there, you can have a coffee there, you can enjoy the entire experience there, and that's how they're powerful.
You can't have coffee there, but yeah.
Chota sa cafe hai.
No. I don't know which Apple store you've been to. You can't have coffee there. In fact, none of the eatables are allowed inside any of the Apple stores. But yes, it's an experience for sure. And some of them are iconic, especially the one in New York.
Well, I haven't been to any, so I'm looking forward to the Mumbai one. At least that I'll be able to get it. Even if I can't buy one, I'm not willing to.
You don't even like Apple, Anisha.
Because I can't afford it. So the grapes are sour, basically. I'm not willing to shell out 80,000 or a lakh rupees for a phone. Not my cup of tea. But Dipan, are you the one who's looking at the entire manufacturing theme, how things are coming into India? Not just retailing, but manufacturing as well?
Yeah, I think it's a great development that Apple is giving so much focus to India. And although, it's not listed in Indian stock market, but the impact of Apple manufacturing and retail over here is manifold. And I think it will attract many more brands into India. And gradually, I think we are becoming more and more mainstream when it comes to global manufacturing systems. And that's very positive. And with such large mobile phones being manufactured and exported out of India, obviously, the ancillary and the supplier industries are also going to get well developed. So I think this is a very good development we have seen the last 3-4 years or so. And from being a net importer of electronic equipment, cell phones, and related products, we've become a net exporter. So that's very great news on the current account front as well.
There is a uptick there, so we are all set to now close above 17,800. 17,800. Nuresh, what is that big resistance? If that is taken out, then it's going to be clear blue skies for the market. What is that big line in the sand or the point for resistance, which if broken, market's going to fly?
So the first one is 17,800. That changes the structure from a lower top, lower bottom to say a higher top. So this is the first higher top in quite some time. And the next one is that 18,200 mark, which is where there's a cluster of highs in the start of the year. So there is a cluster at 18,200 next. But overall, the first indication the market has given in terms of a trend changes, crossing 17,800, making a higher high. Because from 18,800 all the way down to 16,800, we are in a lower top, lower bottom formation. And say if we were to look at the Nifty 50 equal weight, we broke out 2 days back. So overall, the pricing suggests we are getting into a fresh uptrend. 17,400 should be a base going forward. So my view is not a fly, but it will be a slow and steady up.
You got GIC, you got Star. Let's look at LIC. Let's look at HDFC Life. Is insurance making a comeback? Our market's looking at turning. Nothing happens in LIC. But HDFC Life showing signs of life. There is constructive price action in GIC, which I'm not so sure why. But I think the Star Healthcare, that's the chart where Rare Enterprise is a big investor. That one is making a comeback. It's still way below its offer price, IPO price of 900 around. But 600 rupees for a stock which was 450, 460 or 475 a month ago, I think it's a very impressive comeback. But the day really belongs to Divi's. Kunal, now you are all set to, let's say, close above 17,800. This important support, resistance, which has been taken out. So what happens next? 200 points, 300 points, 500 points?
So first things first, we've broken that chain of lower highs and lower lows on a monthly basis.
Okay.
4 consecutive months of correction from December. The markets were making new lows for itself, in fact lower highs for itself on a consecutive basis. So last month high, for example, on the Nifty spot was 17,799, and we managed to surpass those levels, which means we've broken that chain of the downtrend on the indices. Then, and once that happens, and once the index settles off, say, in a trading range, we expect the next up move to be of a magnitude which is, I think, around 400 to 500 points further, which means now 18,200 could be a possible target for the index. And if we try and extrapolate the same for the Bank Nifty, we could be looking at 42,200 to 42,400 as the next potential target for banking index.
Okay, just looking at some of the other performers, well, of course, the story of the day is all within pharma. Divi's, Laurus Labs, even, the healthcare names like a Metropolis, for instance, holding out almost 5% as we speak right now. There's also Page Industries. That's made a move after a very long time. In fact, it's sitting at the session highs again, a solid 4% of a move coming in. And then there's India Mart. It's been strong from the word go today, but right now, again, it's at the day's peak at 53.37 on India Mart right now. Deepan, India Mart and the likes were some of the very fancied names when COVID struck and, life became online and digital. But what is it that you're making of this entire new age tech theme, and whether anything interests you after the recent correction also which has happened in the entire space?
So I think that we are seeing life coming back into a lot of these platform companies, so to speak. I think Paytm has done pretty well, and frankly, their quarterly and monthly numbers also are very encouraging. Nikun spoke about insurance companies, but I think Policy Bazaar is an interesting place when it comes to insurance. They also have been reporting exceptionally good quarterly, monthly performances in terms of volumes. Of course, they are some time away from break-even as most of the other fintechs. But nonetheless, I think it's a solid business model, sustainable, and once they reach break-even point and beyond that, it will be great profits for the company. India Mart is another company we've been very, very positive on. Again, disclosure, we and our clients are invested. It went a bit haywire, I think, when it came to acquisitions of other companies. And they were trying to build an entire ecosystem around B2B marketing by offering other allied services like accounting, finance, logistics as well. But that entire strategy has not played out. But then the stock also has corrected, I think, 50-60% from its peak, and now available at attractive valuations. Some challengers certainly have emerged like Just Dial, but still I think they've not been able to make much of a dent. And with the overall economy improving, advertising spends, advertising budgets looking up for SMEs and MSMEs, I think India Mart is certainly quite well placed. And if they're able to kind of manage their operating profit margin, which has considerably shrunk over the past 5-6 quarters or so, if the operating profit margins are actually bottomed out, then that's great news, and the stock can really start to outperform from that point on.
About India Mart as well. Before taking the BDSC ideas from our technical experts, let's look at the key events which are lined up for tomorrow as well. Of course, we'll be reacting to the earnings coming in from TCS overnight. So that will be important Q, and tomorrow the numbers from Infosys will be out, so that will set the bar for the earnings season this time. But then of course macro data is expected with respect to India CPI, which is expected to cool down to the level of 5.8. After 3-4 months, we'll finally see inflation dipping below the mark of 6%. US inflation is also expected, wherein the expectation is of a 0.2% growth on a month-on-month basis, so the core inflation is expected to remain sticky with a 0.4% uptick. The minutes of FOMC will be out as well, so it's going to be a very, very hectic and busy evening, whether you look at the macro data or the earnings data as well. And in terms of the cues which are lined up for tomorrow, in terms of the corporate action, that too looks quite interesting. You also have the weekly options expiry tomorrow, so the market will remain volatile on account of that. Vedanta, wherein they are going to consider proposal of issuance of some NCD. So Vedanta, as it is, continues to be on everyone's radar with respect to what's happening to their debt. And then PNB Housing, Imami are the other ones which will be in focus on account of the board meetings which are lined up. But time now for the BTST ideas. Naresh, you go first.
So first would be a buy on Gale, very close to a new 52-week high and an all-time high. A stop loss at 107 and a target price of 113. Second is a buy on Lupin, which is giving a short-term range breakout. A pharma pack trade. A stop loss at 676 and a target price of 700.
What's your BTST idea?
So the first one is about Divi Slab.
Bajaj Auto.
Divi Slab. That's why I started with Divi Slab.
But Bajaj is the second one, no?
Yeah.
So change karo.
Why not? But it's good, na? 4% every day.
But it's not overbought or something.
No, not yet. Okay. So 4,400 is the target. So another 120 rupees, 30 rupees on the upside.
So Divi and Bajaj.
Divi and Bajaj.
Okay.
So Divi Slab has a target of 3,300, which means even after trades 9% plus up move, I'm expecting at least another 120 to 130 points on the upside. Stop loss for this trade is 3,144.
Dipin, we haven't spoken about it, but let's say in the month of Feb, when we were dealing with unusually high temperature, the view was that we could be in for a tough year and monsoons would be subpar. Yesterday's IMD's forecast in a sense has dismissed that concern. What will be the implications of that for the markets?
I think sentimentally it's quite positive that the IMD has come out and forecast a normal monsoon, but the real effect of the monsoon we come to know only in September or so. And this time I think the monsoons are less of a threat because of very high reservoirs. And overall I think we are entering into election year next year. So there could be a lot of rural spending as well by the government. So on the whole, I think rural demand will sustain even if the monsoons are subpar. So that's not really the major risk factor. In fact, we have seen a lot of signs that rural spending has come back, as is visible in two-wheeler sales and some of the FMCG sales as well. So I'm not giving so much importance to monsoon unless there's a complete and outright drought. I think even if it's 4-5%, maybe even 10% below the normal, it won't have much of an impact on the economy.
Dipan, always good to have you on the show. We'll let you go on that note. Let's just begin winding up for the day. 17,863 on the futures at the high point of the day. No complaints really. 72 points higher. 0.5% uptick coming in for the Nifty Spot as well. And we've managed to close above that 17,817 mark. Let's see though, post-adjustment, whether we still cling on to this mark. I think we should. Today's leader, of course, has been Pharma all the way. Be it Divi's, be it Laurus, Metropolis. These are all have been significant movers. Even DRL has managed to put on a good show, about 2% higher for this one. Infi ahead of its numbers tomorrow, going in strong, 1.5%. TCS, 1% higher. Tech Chem. So, in fact, the entire IT pack, much unlike how the moves were on the sector yesterday, today it's been a bit of a mover. ICICI Bank continues going strong. Asian Paints as well, another strong session. Bajaj Auto, again 2.5% of a solid move coming in on this one. And from within the broader end of the market as well, there's been an India Mart, a Page Industries. These are all stocks which have done pretty well for themselves. Biocon, IGL, Ambuja Cement, Lupin, GNFC, Naukri, Adani Enterprises, and yes, Nikunj, McDowell's also goes home with a 2.25%.
Well, Dua, Dawa and Daru. There are three things which always work in a market like India. So it's been a good day, Aisha. It's been a good day because technically 17,800, you've closed above that. So now you'll be forced to relook at the positioning of the market. So this market has moved beyond just a bout of short covering. The bout of short covering has become a rally, and will this rally translate into new line of momentum? I mean, we've got a truncated week. But tomorrow I think would be an interesting session, because tonight we will get to see a print on the US CPI data, which is the single most moving factor for the market in the short term to decide the near term direction. Now remember, this is a lag data. Crude prices have gone up. Post this number in a sense would be tabulated. So I don't know what would be the relevance of this number, but it's a number which surely will have an impact in terms of understanding which way the US Fed is going to move. So 12 seconds, and it's been a good day, it's been a good patch. We are up about almost 800 points plus, nearing 900 points approximately from the recent low of 16,800 to 17,800. That's a 1,000-point rally. It's been a good, solid and a very formidable comeback. The breadth again, it is it's clearly in favor of advances. So
yeah, absolutely. So managed to finish off above that 17,800 print finally, and it's an uptick of 100 points. Couldn't have asked for anything better. But for now, we're going to wind it up right here in this edition of Closing Trade.